In this video, we are going to talk about why did brokers restrict trading from some names such as Robinhood, WeBull, TD Interactive. Why are they only allowing you to close positions but not buy? Who's to blame in this situation? Is it the brokers or the clearinghouse? Why are brokers selling you out of your position? And we're going to talk about margin call and then basically what to expect moving forward. What's going on, guys? Welcome back to another video. So we got a lot to talk about in this video. There's a lot of craziness happening in the market today, and I kind of just want to break that down real quick. So first and foremost, let's look at Gamestop's chart. So pre-market today, Gamestop hit a high of 513, and right now we are at about $260. So we're down about 50% from that point. Now, this has been happening, or this happened today because a lot of big brokers such as TD Ameritrade, Robinhood, WeBull, and so on did not allow people to buy GameStop, did not allow people to purchase AMC, and so on. Now, the reason they did not allow them to buy it is, we're going to dive into that, but let's just break down what the, news was or what they said. So Robinhood came out with the press release, so did TD Ameritrade, and they said, in the interest of mitigating risk for our company and clients, we have put in place several restrictions on some transactions in GME, AMC, and other securities. We have made these choices out of an abundance of caution amid unprecedented market conditions and other factors. Robinhood basically said the same thing. Now, a lot of people are blaming TD Ameritrade, are blaming Robinhood, and I get it, they are the primary brokers. Now, what you guys have to understand is behind the primary brokers, we have something called a clearinghouse. Now, that is what we're going to dive into. So basically, if you're purchasing certain names like American Airlines, AMC, BlackBerry, BBBY, GME, all these names that have been, squeezing super high because of the short squeeze, they're not allowing you to buy them. Now, there could be some manipulation involved with this, which I'll break down, but let's understand what the underlying factor of this is first. So the issue comes from liquidity risk from the clearinghouse on stocks like GME. So there's a lot of liquidity risk being put on the clearinghouse. Now, what is a clearinghouse? Who is the clearinghouse? Let's break that down. I think that's where it gets super interesting. So a clearinghouse is basically the middleman that settles the trades between a buyer and a seller. So basically, when you buy a stock, a clearinghouse holds it for 2 days for the trades to settle. At some point, that clearinghouse can't afford to hold any more to settle, so all they can do is sell. And basically, that's what's happening right now. So if you guys notice, when you guys purchase a stock or whatever the case may be, a day or two later, you get a confirmation. The confirmation says your trade is confirmed. Here's a confirmation of your trade. The reason it takes two days is because clearinghouses are required to hold that trade for 2 days. They're required to let that trade settle before allowing any sort of transaction. So once again, as soon as you buy, right, you are buying it from a seller, and as you're buying a stock from a seller, the clearinghouse is the one initiating that transaction and facilitating that. Without a clearinghouse, we wouldn't have a lot of solid liquidity and movement in the market, so we need a clearinghouse. Now, the problem that's happening right now is the clearinghouse, right, is having liquidity issues, and they don't want to take on more risk, and they are unable to kind of take that risk on based on what they're saying. So apparently, in the past few days with stocks like GME and AMC, we have been seeing record high shares traded. We have seen the most amount of shares traded in GME ever, even more than Tesla. If you guys remember, not too long ago, Tesla was number one. GME has taken that over in the amount of shares traded. So just to kind of, paint a picture on that, it kind of works like this. Let's say you buy a stock, you buy $100 worth of stock, all right? You're buying it from a seller. The seller sells $100 worth of stock, right? Let's say one stock. Now, when the seller sells you the stock, right, and you're the buyer, the clearinghouse is required to hold it for 2 days and put on that risk. Now, when you get record levels of, transactions happening, the clearinghouse may not have enough liquidity to support that. So that could be possibility number one. Now, going into the clearinghouse, this is where things start getting a little bit interesting. So Apex Clearing is the primary clearinghouse. It's one of the biggest clearinghouses out there that's actually behind Robinhood, TD, and WeBull, and so on. Now, the interesting thing is Apex Clearing is owned by Peak 6. Now, I haven't looked into this all the way. I'll probably make another video on this, but Peak 6 could possibly have a relationship with Melvin Capital, Citadel, and Point72, which are all involved in the GME short. Now, that could be a possibility, but even if we factor that possibility out, the liquidity issues Apex is dealing with could be a real possibility. Because like I said, a lot of the trades came from platforms like Robinhood and so on. And, Apex being their primary clearinghouse, they could have a huge effect on the liquidity issue. So I'm not going to factor that out. And this could be a big reason for everything that's happening. Now, obviously, we would like the SEC and so on to get involved and make sure there's no actual relationship that's going on between Melvin Capital, Citadel, Point72, and so on. But up until now, this kind of makes sense. Right now, next thing I want to talk about is why are brokers selling you out of your position? So I saw some things on Twitter where some people are saying, you know what, Robinhood just sold me out of my shares. I had 100 shares. They said we're selling your shares because of risk, whatever the case is. Now that only makes sense if you are on a margin, if you are using margin. So basically, if you have 100 shares of AMC, GME, whatever, and that's those 100 shares you own and you're not using margin, they can't go and sell your shares. Now, they, however, can sell your shares and they have the right to if you are using margin. Now, what happens in situations like this is the clearinghouse like Apex, they need higher margin requirements. So typically every stock you trade has a certain margin requirement. So margin, for anyone that does not know what it is, it's basically when you borrow money. So if you put $2,000 into an account, your broker will say, you know what, we're going to give you $2,000. So now you have $4,000 worth of buying power. So you can go buy $4,000 worth of a stock depending on what the margin requirements are. Now, let's say person A puts $2,000 into an account. He gets margin of 2,000 plus. He or she has a buying power of 4,000, and they go and buy stock AMC at 10. Now, what may happen is the margin requirement, instead of it being, let's say, 50% or 70%, may decrease. So now what the firm may require is either for you to add more money or for you to sell your position. But because of all the craziness going on, the firms like Robinhood don't want to take on that risk. So they're saying, you know what? We're going to sell for you. And if you use margin, your broker has every right to sell whenever they want. So if they sold because you have used margin, you really kind of can't do anything about that. Now, my advice to you would be, if you're trading names like AMC, GME, and so on, please do not use margin. So for example, if you have $2,000 and you do use the margin, and let's say they give you $2,000 and you have a total buying power of $4,000, and you're like, you know what, I'm gonna go and buy a stock, great. But if you go and buy a stock like AMC and you put, $4,000 into it at $10, right? If AMC goes to 7 or 8, right, or even at 9, the margin requirements may increase, your broker can sell out your position. Now, if you go do this with a stock like Apple, Amazon, and bigger names that are safer and aren't as volatile and aren't having these crazy swings, you're okay. But if you're doing it with names like AMC, right, it's better for you to put in $2,000 of your own money and ride out the wave than to put in $2,000 and get stopped out by your broker and kind of putting on more risk. So be careful with that. And if you do have margin open on any of these wild names like Nokia, GME, AMC, I would recommend, like what I would personally do, no recommendation, I would not use margin on them. I never ever touch margin when I touch these names unless it's possibly a day trade. But if I'm holding overnight, I wouldn't touch. But in this situation, I wouldn't even use it as a day trade because the liquidity risks and volatility have increased so much that the brokers are really, really going crazy. So that would be something that I would really take into consideration. Now, what's going to happen moving forward? Now, moving forward, obviously, there's a lot of speculation going on with maybe the SEC opening something up with this and whatnot. This could have a lot to do with it being fraud. There's a lot of rumors going on that, Citadel came in or Melvin Capital kicked in and they opened up more of their positions, meaning they came in today and they shorted more after saying, hey, we've cleared our short in GME. That could definitely be a possibility, right? However, like I said, this is something that needs to be looked more into, and I think Moving forward, if it is just a clearinghouse issue in a day or two, I think once everything does settle and transactions have cleared and things start getting normal, we might see buying resume. I just saw about 10 or 20 minutes ago, I think WeBull opened it up. I think Robinhood's going to open up buying a little bit tomorrow, but I think ultimately it comes down to the trades to settle. And by tomorrow, all the trades should settle, especially going into Monday or Tuesday. So I think by then things should come down to normal. That's if it's 100% a clearinghouse issue. Now, can we see a squeeze moving forward on these names? It's still a possibility. I think if there's still buying pressure and we see a gamma squeeze like we saw with GME, it's definitely a possibility. But my advice to you guys is if you're in these positions, guys, lock in profits. If you're up 100, 200, 300, 400% on calls, whatever the case is, puts, whatever you're in, trust me, if you want to be in this game for a long run, lock in profits. If you're up 10% even or 20%, whatever the case is, go in and lock in some profit. Why? Because when you lock in profits, you are offsetting risk and you're allowing yourself to stay alive in this game for longer. Do not be stubborn in this situation saying, oh, AMC is going to go to 100 or GameStop's going to go to 1,000. Can it go? Possibly. We don't know. But if you're in a position, take some capital off and play smart. Don't trade where one trade will wipe you out and your whole account is going to go to zero. So with that being said, thank you so much for watching, guys. If you guys like this video, please give it a thumbs up and comment down below. Did you guys trade AMC? Did you guys trade GME? What happened? And let me know, and I will see you guys in the next video. Thank you.